Good morning, good afternoon, good evening, depending on where you are on the earth. It's Jean-Pierre Muhile from Ultimate Traders Company Limited. Today, we are going to run the third course of the series of our Forex courses. But before we continue, let's meet after the intro. Thank you for joining us again for this third lesson of our series of Forex trading. And please, if you are new to our channel, don't forget to subscribe, to comment and to share so that you will know once the next lesson is uploaded to our channel. In our previous lesson, we have seen what the advantage of Forex market. We have seen that the Forex it is a very nice business because it has no commissions, it has leverage, deep liquidity, fabrication materials everywhere, and moreover it requires a very limited investment capital. You don't need the offices or taxes. All you need it is only a smartphone, a computer, or a laptop with internet. We have also learned about the Forex market hours. We have seen that Forex is open 24 hours a day and 5 days of a week. We have learned also about the currencies. We have seen that the currency is a system of money which a particular country uses to facilitate the transaction and to stabilize the economy of the nations. And we have seen that currencies are written with 3 letters. We have the first 2 letters indicate the country which is using this currency, and the third letter indicates the category or the type of the currency which this particular country is using. An example it is when you say USD. US stands for United States and D it is for dollar. So this clearly means that United States country is using dollar, but the dollar of United States as a currency. Another example is when we write CAD. This is Canadian dollar, GBP, Great Britain, or pound, or euro, etc. We have also seen the major currencies, where we indicated that these are the currencies of 8 richest countries on the world, and they are 8. Just USD. From the American continent, there is USD and Canadian dollar. On Europe, there is pound, euro, and Swiss. On Asia, there is Japan yen, and in Oceania, there is Australian dollar and New Zealand dollar. We have learned also about the currency pair, where we have seen that the currency pair is the quotation of 2 different currencies, or just a comparison of the value of one currency to another. And we have seen that to rate the currencies, we use, so we have also seen the categories of currencies. We have seen that the major currency categories of pairs are 3. The major currency pairs, the minor currency pair, which we may call also crosses or minors, simply minors, and the exotic currency pairs. We have learned that major currency pairs are the combinations of major currencies, and they have always to include USD either as a base currency or a quote currency. Briefly, this is what we have learned in our previous course. And if you are new or if you don't remember, please go back and check on our previous lesson, or log on to our website www.ultimatetraders.rw to get more information. Without delaying, let's go to our today's lesson. Today we are going to run the very, very important lessons of Forex, which is called trading psychology. Without wasting your time or without wasting your money in Forex trying to make a living or the profit from these courses, we want to warn you with this course of trading psychology, because it is a factor which makes more than 95% of Forex traders losers. So if you cannot master this course, please don't waste your time, don't waste your money, stop from here. But if you are really ready to put in whatever it costs to master your mind and the courses, let's go on. The trading psychology, it is just refers to the mental state of a traders and his emotion or her emotions that tend to determine a success or a failure of a trade. This is very, very important because many people around the world think that the Forex it is a get-quick scheme, but it is not true. I hope in the introduction, the first course, we have mentioned that Forex trading is a career like others. It is a career like being a medical doctor, a lawyer, or a stylist, or any other career. So if a medical doctor or a lawyer is making, is earning as a salary, let's say $2,000 a month, you should imagine what it will cost you to make the same amount in Forex trading. So many people get along and think that they can make the same amount just in a day or 2 days or from a simple, very small account. So this is not a trend. If you are thinking in this way, you will be a loser, and there is no doubt that you will be a loser trader. A losing trader, a trade based on emotions, on body psychology, on emotions. Emotions, anger, fear for missing, or excitement, and that is what makes many people losers. Contrary to the winning trader, they make the decisions of the present trades based on a statistic or a statistic advantage of the market that make accurate trading decisions. So you need to master your mind, you need to master the courses before you go on or before you make a living from Forex trading. Let's see what the causes, some of the causes of bad trading psychologies. They are plenty, but we are going to name some today only. The reason number one from which causes bad trading psychology is false expectations. As I mentioned, false expectations, it is when you want to turn just $100 into $1 million in a year or 10 years. This is long expectations, or building a course on air just in time from Forex. It is true, Forex it is the biggest market on the world, and many people make a living, even a fortune from it, but it requires determinations and hard working, and in addition, money makes money. If you want to make a lot of money, you will need a considerable capital. So please stop long expectations. We are going to guide you through all you need through the courses in order to make a living or even a fortune through the course. But from the beginning, please stop long expectations. To Forex trading, it is not a get-quick scheme. It is a hard, very hard, hard work, and it is even very strong, and it requires strong determinations to get money from it. The second reason, it is trading without having a trading plan. What is a trading plan? A trading plan, it is a set of rules which enables you to which tells you when to enter or not to enter the market. If you are trading without discipline, you are pressing the trades randomly without rules. And remember, failing to plan, it is a recipe for failing. So we will teach you how to make a proper trading plan in order to make a living from this market. And this is another reason which causes people to have a bad trading psychology. Another course, it is not backtesting data. Backtesting, it is applying your strategy in historical data of the market in order to see if it could have been, if it has been traded previously, in order to see if it could have been made money. So this gives you confidence of what you are doing, and it limits the fear of making trades. Trading without backtesting, it is a recipe also for bad trading psychology. Another course, it is poor risk management. Poor risk management, it is when you bet all of your money, willing to make a big return on your money. For example, let's say, for example, when you take an account of, let's say, example of 1,000 account, and you put it all in your single trade, hoping that you're going to make $1 from this particular trade. It is possible, you can make it, but the problem is how many times are you going to do this? Believe me, if you do this, it is a matter of time to see your account, you growing your account. So therefore, you must have the proper risk management if you really wanted to make a living from Forex, or if you wanted to avoid the poor risk management. Because let's, for example, if I have an account of 1,000 US dollar, and on a single trade I press only $100, this is which is equivalent to 1% of my total account. If I lose this money from a single trade, I will not panic enough, because I will still have 900 US dollars. The next dollar, I can risk the same $100 and make 200 US dollar, which will make my initial capital to 1,100 US dollar. You see that if you risk less, you don't have a bad trading psychology if things went long. So these are some of the major causes of a bad trading psychology, and let's see without delay, see how we can fix these problems. Normally, to have a good trading psychology, you will need to have two things. Number one, it's the beliefs of what you are doing. Number two, it is the reduction of fear and pain. And to have these two things, you will need to have what we call a triangle of successful trader. Just after you understand and you master the basic of Forex trading, you will need three things, important things, to make a living or even a fortune in a Forex market. And this is what we call triangle of successful trader. The things number one you will need, it is what we call a plan, a trading plan. Or just a strategy. And if you remember well, a strategy is a set of rules which tells you when to enter or not to enter a trade. And this strategy, in order to make you profitable in forex market, it must have an edge. It must have been proven that it has a positive advantage over the market. So this we'll see it in later. And the second thing you will need, it is risk management, proper risk management. And here, as I said, we recommend to do not risk more than 3% of your total capital. So especially for the beginners, we always recommend to risk at least 1% or even smaller of 1% of your total capital. This means if you have a capital of 1,000 US dollar, we recommend to risk from one single trade between $100 to $300 per trade. So this will limit the fear of losing all of your money, because you lose a small chunk of your capital once the trade loses. Remember, in forex we don't need to win every trade in order to make money every time. So because we deal with statistic advantages. The third things you will need, it is good trading psychology. Good trading psychology. So after you have all of these three things, and you will need to have a good trading psychology to stick to your trading plan and your risk management. And believe me, once you have these three things together, no one or nothing will stop you to make money from forex trading. So this is what is we have to tell you about trading psychology today. Please, if there is something you have not understood well, or if you wanted to get more details about trading psychology, please go to our website www.multitraders.rw, or you can even email us or write us to one of our communication means. You can even put the comments onto this video. We'll be very glad to help you and to explain you more. So let's wind up our course today, but don't forget to hit the like button and subscribe to our YouTube channel so that you will not miss the next course. Ciao.